Nvidia's stock price is around $124. After days of charting and deep research, I've uncovered the perfect buy-in price to see no red in your portfolio. Want to make thousands shorting Nvidia? I'll reveal a key price point and why Nvidia is a fantastic long-term hold. This is what top investors won't tell you. This is how you really get money in the stock market.
It's an Nvidia world, we're just living in it.
Before I give you the perfect buy-in price, let's rewind to June 19, 2024. On this day, Nvidia achieved something monumental.
Nvidia has officially passed Apple and Microsoft as the world's most valuable company.
Yeah, remember just a couple of weeks ago, it did a stock split, so its shares were worth over $1,000 US. They split each share up into 10, so down to about $100 a piece.
The chipmaker's share price climbed to an all-time high. The stock ended the trading day at nearly $136. That demand for its products has boosted its sales and profits over the last few years. Many investors believe its earnings can grow even more, which has caused its share price to soar.
All due to artificial intelligence and investors really still piling into Nvidia. I think the stock split really helped it, Pete, because it made it more affordable to a lot of people out there that were being put off by the price of $1,000 a share. And since then, it's gone up to almost 30% in value.
It surpassed Microsoft to become the largest publicly traded company in the world. Why is becoming the largest publicly traded company important for Nvidia? Well, for starters, money is power. And if you are the largest publicly traded company, you have the most money. More money means more funds for research and development. This leads to the innovation of better products. Better products mean more money. More money also means more acquisitions. Making acquisitions is a strategy companies use to grow bigger. The bigger, the better. For example, ever heard of the headphone brand Beats? Well, they were bought by Apple in July of 2014. Apple had been wanting to expand into the music industry, and this one acquisition allowed Apple to enhance their music offerings and strengthen their position in the music industry. Beats brought popular headphones, a strong brand, and a streaming music service, which helped Apple improve its own music ecosystem and appeal to a broader audience. Engadget reported in May of 2019 that Apple's $3 billion purchase of Beats has already paid off. Now back to Nvidia. They've already been expanding. They've already purchased 3 companies this year. In April, they purchased Israeli startup Run AI.
Giant Nvidia has pulled off a massive acquisition, $700 million that they had laying around, and they decided to acquire Run AI.
Run AI will help Nvidia expand by enhancing their AI infrastructure management and maximizing the performance of their GPU clusters. In May, they purchased another Israeli startup called Desi. Desi will help Nvidia by optimizing AI models to run more efficiently on their GPUs, also enhancing performance and expanding Nvidia's AI capabilities. In June, Nvidia purchased American-based company Shoreline. Shoreline will help Nvidia by automating the detection and fixing of issues in their computer systems, enhancing efficiency and reliability. These strategic acquisitions show how Nvidia is positioning itself to dominate their industry. Nvidia is so far ahead of their competition that their CEO, Jensen Huang, gave a keynote address to open Nvidia's GTC 2024 conference. The guy basically has a roadmap to where the company is headed years down the line. Huang introduced the Blackwell GPU.
Ladies and gentlemen, this is Blackwell. This is our production board. This is the most complex, highest performance computer the world's ever made.
A beast designed for massive AI models. It's 30 times more powerful than their previous models. This means faster and more efficient AI processing. He also talked about generative AI taking over future data centers. Major cloud providers like AWS and Google Cloud are already on board with Blackwell. This will significantly reduce computing costs and energy use. Next, NVIDIA's Omniverse platform. It creates digital twins, virtual replicas of real-world systems. This tech will boost productivity and efficiency in industries like manufacturing and logistics. Huang also announced Earth 2.
This is Earth 2. The idea that we would create a digital twin of the Earth, that we would go and simulate the Earth so that we could predict the future of our planet to better avert disasters or better understand the impact of climate change so that we can adapt better, so that we can change our habits now. This digital twin of Earth is probably one of the most ambitious projects that the world's ever undertaken.
A set of APIs for better weather forecasting. Partnered with the weather company, NVIDIA aims to save lives and reduce economic losses from extreme weather. In healthcare, NVIDIA is accelerating drug discovery with advanced AI models. Their new NVIDIA Inference Microservice, NIM, simplifies AI model deployment across platforms. Finally, NVIDIA is pushing physical AI in robotics. Integrating AI and digital twin tech, they are creating highly efficient robotic systems to revolutionize industries. These announcements show NVIDIA's relentless innovation and strategic vision. They are not just leading, they are defining the future of technology. And what makes NVIDIA even better is their price. On May 22nd of this year, NVIDIA announced another split. This time it's a 10-in-1 split. A stock split is when a company divides its shares into more shares. NVIDIA turned 1 share into 10. The value of the company stays the same, but the shares become cheaper. Companies do this to attract more investors. Lower prices make the stock more affordable and appealing. Before the split, NVIDIA's shares were trading at around $1,240. After the split, the price dropped to about $124 per share. This move made NVIDIA's stock more accessible. It showed their confidence in future growth. Lower prices mean more people can buy in. More buyers can drive up demand and investment. Stock splits are a good sign. They usually indicate a strong and growing company. Historically, companies that split their stock often outperform the S&P 500. The S&P 500 is a list of 500 of the biggest companies in the US. It's a good measure of how the market is doing overall. For example, companies like Apple and Tesla did splits and saw their stock prices soar. It's a sign they expect continued success and growth. NVIDIA's split means they are doing well and expect to do even better. It's basically a bullish signal for investors. But the thing they don't tell you is, after a company split, they tend to fall a bit before they rise in price again. Like I said at the beginning, NVIDIA is priced around $124. Buying at the perfect price is crucial. It can make the difference between seeing green or red in your portfolio. You need to know the key price points. These are the levels where the stock is likely to bounce or break. Support levels are prices where the stock tends to stop falling and bounce back up. They act as a floor that the stock price rarely goes below. Resistance levels are prices where the stock tends to stop rising and pull back. They act as a ceiling that the stock price struggles to break through. For NVIDIA, there are two critical buying prices, $118.16 and $82.18. The $118.16 level is a strong support. It's where the stock has bounced back before. Buying here increases your chances of seeing gains quickly. The $82.18 level is a deeper support. This is for those looking for a bigger bargain and willing to wait a bit longer for the payoff. But here's another way to profit: shorting. Shorting means betting that the stock price will go down. If Nvidia drops to these key support levels, you could make money by shorting at higher prices and buying back at $118.16 or $82.18. Shorting Nvidia at around $124 and covering your short at $118.16 could yield a nice profit. If you're more patient, shorting at $124 and covering at $82.18 could be even more profitable. Remember, buying at the perfect price is key. It reduces your risk and increases your potential profit. Shorting at the right times can also boost your earnings. These price points are where you can see the best returns with the least risk. If you found this helpful, make sure to check out our other videos. In particular, our recent deep dive into former President Donald Trump's 34 felonies and what it means for America. Will he go to jail? This is probably one of the best scripts I've written. It's packed with insights and predictions that you won't want to miss. Stay tuned, stay informed, and keep getting money.